Have you ever wondered why some people seem to have a magic touch when it comes to growing their wealth? Being wealthy, it's more than just having a fat bank account. It's about financial freedom, the ability to live life on your terms. But how do you build it? Investment. This is the secret sauce that can turn a modest income into a fortune. But it's not as simple as just throwing money into the stock market and hoping for the best. The key is to diversify, to spread your investments across a variety of asset classes. Think of it like a buffet. You wouldn't fill your plate with just one dish, would you? No, you'd sample a bit of everything. It is the same with investing, from real estate to renewable energy, from equities to exchange-traded funds. Each asset class offers its own unique potential for growth. The secret lies in understanding the potential of different asset classes and leveraging them to your advantage. Welcome to Lexi. The first asset class to consider in 2024 is real estate. Now, when we talk about real estate, we're not just talking about buying a house or a condo. We're talking about making strategic investments with a long-term vision. So, why is real estate such a compelling investment in 2024? Let's break it down. Firstly, urbanization. With more than half of the world's population now living in cities, the demand for urban real estate is skyrocketing. Whether it's residential properties for the burgeoning middle class or commercial spaces for businesses, urban real estate is a hot ticket. Secondly, population growth. The world's population isn't getting any smaller. In fact, it's estimated to reach nearly 9 billion by 2030. That's a lot of people needing a place to live, work, and play. This ever-increasing demand for space is a key driver of real estate values. Thirdly, market trends. It's clear that the real estate market is on an upward trajectory, from the rise of remote work necessitating home offices to the booming e-commerce industry driving the need for warehouse space. Trends in the market are creating new and exciting opportunities for real estate investors. But, like any investment, real estate isn't without its risks. It requires a deep understanding of the market, a keen eye for potential, and a willingness to ride out the inevitable market fluctuations. It's not for the faint of heart, but for those who are willing to put in the time and effort. Real estate can offer substantial returns. Let's not forget, real estate isn't just about making money. It's about creating spaces where people can live, work, and thrive. It's about shaping our cities and our communities for the better. It's about leaving a lasting legacy for future generations. So, if you're looking to diversify your investment portfolio in 2024, don't overlook real estate. With the right approach, it can be a powerful tool for wealth creation. Real estate, when understood and utilized, can be a goldmine for wealth creation. Next up, we have business equity. Often overlooked, business equity holds the potential to offer substantial returns. It's the value derived from owning a piece of a company. When you invest in business equity, you're essentially buying a share in the future success of a firm. Now, this is not without its risks. The business landscape is ever-changing and companies must adapt to stay afloat. But with risk comes reward. Consider the tech titans of today. Early investors who took a gamble on their business equity are now reaping the benefits of their foresight and courage. It's all about identifying potential, understanding market trends, and of course, a dash of luck. But remember, it's not just about the big players. Small and medium-sized enterprises can offer rich pickings too. They may be the underdogs today, but tomorrow's success stories. Investing in business equity can be a game changer if done right. So keep your eyes peeled for opportunities. They're everywhere. Ever thought your collection could make you wealthy? Here's the thing about collectibles. They're not just about nostalgia or personal sentiment. They're a legitimate asset class with serious potential for financial growth. Think about it. Collectibles. be they vintage comic books, rare stamps, or limited edition sneakers, have a unique value proposition. Their worth is intrinsically tied to rarity and demand. The fewer items in circulation, the higher their potential value. And as for demand, well, that's fueled by a passionate community of collectors, each vying for that elusive piece to complete their collection. Moreover, the digital age has served to amplify the value of collectibles. Virtual platforms and online auctions have made it easier for collectors to connect, trade, and bid, pushing prices to unprecedented heights. And let's not forget about the burgeoning market for digital collectibles and NFTs. Collectibles are an unconventional yet promising avenue for wealth creation. Now, let's dive into the world of stocks and bonds. Equities, or stocks, and bonds are two of the most well-known and frequently traded asset classes. They may have been around the block a few times, but that doesn't mean they've lost their luster. In fact, their potential for growth continues to attract both seasoned and novice investors. When we talk about stocks, we're talking about buying a piece of a company. You're essentially becoming a part owner. The value of your stock goes up and down based on how well the company is doing. In the long run, stocks have historically provided substantial returns. This is why equities have been and continue to be a popular choice for investors looking to grow their wealth. But what about those market fluctuations? Can they be a bit nerve-wracking? Sure they can. That's where bonds come into play. Bonds are like the steady, reliable friend you can always count on. When you buy a bond, you're lending money to an entity like a government or a corporation. In return, they promise to pay you back with interest over a certain period of time. It's a safer bet, but the potential returns are generally lower than stocks. So, what's the forecast for these two asset classes in 2024? Well, it's looking bright. For stocks, we're seeing promising growth trends in sectors like technology, healthcare, and renewable energy. The rise of sustainable and socially responsible investing is also influencing the market, with companies that prioritize environmental, social, and governance factors often seeing a boost in their stock prices. On the bonds side, we're seeing a resurgence in interest due to economic recovery and inflationary concerns. Investors are turning to bonds as a way to hedge against potential stock market volatility and provide a steady stream of income. It's clear that both stocks and bonds have their unique benefits and risks, but one thing is certain: they continue to be a vital part of a diversified investment portfolio. Whether you're seeking growth, income, or stability, these asset classes have something to offer. Equities and bonds continue to be a staple in any robust investment portfolio. Exchange-traded funds, or ETFs, are another asset class to watch. These highly versatile investment types are famed for their ability to grant access to a broad spectrum of markets and sectors. Imagine having a piece of the entire market with just one purchase. That's the power of ETFs. As an investor, ETFs allow you to diversify your portfolio, spreading your investments across a variety of sectors. This can help mitigate risks and potentially increase returns. And the best part, ETFs are traded like individual stocks, providing the flexibility to buy and sell throughout the trading day. In terms of market trends, ETFs have been seeing a steady rise in popularity. Investors are increasingly recognizing their potential as an effective tool to access different markets and asset classes. So, whether you're a seasoned investor or a newbie, ETFs could be a key player in your wealth-building journey. ETFs offer a unique blend of diversification and flexibility, making them a great addition to any portfolio. In 2024, sustainable and impact investments are taking the investment world by storm. Picture this: a world where your money does more than just grow. It makes a real positive impact. That's the beauty of sustainable and impact investments. This asset class is all about investing in companies that prioritize the triple bottom line: people, planet, and profit. It's about looking beyond traditional financial returns and recognizing that our investments can shape the world for the better. But let's be clear, sustainable and impact investments aren't just about doing good. They're about smart investing. Research shows that companies focusing on sustainability often outperform those that don't. Why? Because sustainability is about long-term thinking, about building resilient businesses that can weather whatever storms the future might bring. Consider this: in the past couple of years, sustainable investment funds have seen record inflows. More and more investors are recognizing the potential of this asset class. It's a trend that's set to continue as we move forward into 2024 and beyond. Sustainable investments span a wide range of sectors, from renewable energy to sustainable agriculture, from affordable housing to companies promoting diversity and inclusion. It's an exciting, dynamic field, and one that's ripe with opportunities for those willing to look beyond the traditional investment playbook. And let's not forget about impact investments. These are investments made with the intention of generating positive, measurable social and environmental impact alongside a financial return. With impact investments, you can support innovative solutions to some of the world's most pressing challenges while also growing your wealth. In short, sustainable and impact investments represent a win-win. They're good for the planet, good for society, and good for your portfolio. It's an asset class that's not just about making money, it's about making a difference. So, as we look to the future, remember this: investing in sustainability is not only good for the planet, but also for your pocket. We're now venturing into the worlds of Forex and venture capital. As we dive into the realm of Forex, also known as the foreign exchange market, we're exploring a dynamic, liquid, and global marketplace. It's the world's largest financial market, with trading volumes exceeding $5 trillion a day. Yes, you heard it right, 5 trillion. Here, currencies are bought and sold based on current prices, which are influenced by various factors such as economic indicators, interest rates, and geopolitical events. It's a market that never sleeps, operating round the clock, 5 days a week. Now, while Forex trading offers potential for significant profits, it also carries substantial risk. Volatility can swing both ways, and the market's liquidity means prices can change rapidly in response to news and short-term events. To navigate this market successfully, one needs a solid understanding of global economies, sharp analytical skills, and a healthy appetite for risk. On the other side of the coin, we have venture capital. This is a form of private equity investing where funds are provided to early-stage, high-potential growth companies. Venture capital is all about innovation and potential. It's about finding that next big thing before it's big. The aim here is to invest in a company during its early stages and reap the rewards when the company grows or goes public. Venture capital investments are inherently risky. Many startups fail, and when they do, investors can lose their entire investment. However, the potential rewards can be enormous. Think about the early investors in companies like Amazon, Google, or Facebook. Their initial investments have multiplied many times over, creating enormous wealth. In both Forex and venture capital, knowledge is power. By understanding the markets, staying informed about global events, and carefully analyzing potential investments, investors can mitigate some of the risks associated with these asset classes. Forex and venture capital offer high-risk, high-reward opportunities for savvy investors. So if you're someone who enjoys the thrill of the chase and has a knack for spotting potential, these could be the perfect arenas for you to grow your wealth in 2024. Lastly, let's talk about insurance and renewable energy. Two contrasting yet equally promising asset classes that are set to make waves in the year 2024. Insurance, often considered a safe haven, is an asset class that provides a buffer against financial risks. In the ever-evolving global economy, the need for insurance products is only going to increase. From health insurance to property insurance, the market is vast and varied. And let's not forget about the emerging markets. As these economies grow, so does the demand for insurance solutions. With the right strategy, insurance can provide steady returns, making it a must-consider asset class. On the other hand, we have renewable energy. It's no secret that the world is shifting towards more sustainable means of power generation. The push for clean energy has never been stronger, and this transition is creating a goldmine of investment opportunities. Wind, solar, hydroelectric. The renewable energy market is diverse and expanding rapidly. The value of this asset class is influenced by a variety of factors. Technological advancements are driving costs down, making renewable energy more accessible and lucrative. Government policies and regulations are also playing a significant role in promoting the use and development of renewable energy. And let's not forget about the growing environmental consciousness among consumers. This shift in mindset is driving demand for renewable energy, adding to its investment appeal. Investing in renewable energy is not just about generating returns. It's about contributing to a sustainable future. It's about making a positive impact while making profits. In conclusion, both insurance and renewable energy are asset classes that have a lot of potential. They cater to different risk profiles and investment goals, but both offer unique opportunities. The insurance market, with its steady growth, and the renewable energy sector, with its dynamic and impactful potential, are well poised to be part of your wealth-building strategy in 2024. Both insurance and renewable energy offer unique investment opportunities in 2024. Remember, the key to wealth creation lies in understanding these asset classes and leveraging them effectively. So, start investing today and watch your wealth skyrocket in 2024. Hit the like button to support and share this message of empowerment with others. And if you haven't already, subscribe to our channel. Join our growing community of dreamers, doers, and believers. Together, let's unlock endless possibilities and transform our aspirations into reality. I will see you in the next video.